Good morning, everybody. Hope we're doing really good today. Welcome back to the channel. There's some companies that you can buy and just hold for a long time, and they're going to make you rich. They're going to outperform the S&P 500. They're going to compound your wealth, and then you buy them now and you can forget about them. And just hold it for years and years and decades. And these companies, I think, have a couple things in common. One of them is increasing revenue, another strong profit margins, pricing power or brand recognition or some sort of economic moat, strong balance sheet, and then rewarding shareholders, usually through dividends, increasing dividends, and share buybacks. So the company I have in mind today is one of these kind of companies. This company has outperformed the S&P 500. It's returned on average 19% a year for the past 15 years. And comparing that to the S&P 500, that's on average returned 10%, and that's dividends reinvested over the same time. 19% a year for 15 years, that's enough to turn every $1,000 into $14,000 today. Company I'm talking about is Home Depot, the biggest home improvement retailer in North America. Has 2,200 stores. I think the website says it has 2,298 stores, and is founded in 1978. They provide tools and like the home improvement supplies like plywood, drywall, and anything else you need when working on your house. You go to the stores, you can get help with the staff to sort out what you need for your project. You can look on the website, you can order on the website but pick up at the store, you can have it delivered, and you can even go and have through them that contract out, and they'll send a contractor to your place to help you renovate, give you quotes on how much it costs to renovate a bathroom or install a water heater or something like that. And then they streamline the whole process of that, and you do that in one stop at Home Depot. Home Depot has that economic moat, and it's really benefited from the COVID shutdowns because a lot of people were at home and they had time to, start these home improvement projects that they may have been putting off for some time. But then they were stuck home and Home Depot was open, so everyone got to take their time and start renovating their houses and fixing their houses up. Home Depot even seen a 20% increase in sales in 2020. Also benefited from the boom in housing prices, with investors buying houses, renovating them, and new construction builds. All these people, whether you're, just a guy working a do-it-yourself project or some sort of professional contractor building a house or renovating for an investor, something like that, you're probably going to Home Depot to buy a lot of the stuff that you need. The business model for Home Depot is great, and the financials are great, but they've been doing great from before COVID, and they've been doing great for years. And if you look at the revenues for the past 5 years, they've been growing on average of 7% a year. So in 2016, their revenues were about $94.5 billion. And then in 2020, they had revenue of $132 billion. So they're growing their revenue on average of 7% a year. Net income has been increasing as well. And this is where it starts to show what kind of great financials Home Depot has. It's been growing its revenue, but it's becoming more and more profitable. Where revenue has been growing 7% a year, net income has been growing 10% a year. So they have $7.9 billion in net income in 2016, but in 2020, they have $12.8 billion. And then earnings per share is growing even faster at 13%. So $6.45 in 2016, and then last year they had $11.94. Free cash flow, this is cash from operations, subtract capital expenditures. This is all the money they need to pay out dividends and pay down debt and do all the extra stuff with. That's been increasing on average of 15% a year. So the $8.1 billion in 2016, and last year was $16.3 billion. Balance sheet looks good as well. Home Depot has about $6.6 billion in cash with $30.6 billion in current assets. Compare that to current liabilities. They have more assets and liabilities. They have $27.7 billion in current liabilities. And then they only have $31 billion in long-term debt. Now that sounds like a lot, but remember they have that $16.3 billion in free cash flow. This year's dividend will be $6.60, and their most recent increase was a 10% dividend increase in February. And they've been averaging about 20% an dividend increase a year for the past 5 years. And it has a low payout ratio of about 50%, making this dividend completely safe. And the other way that you return money to shareholders, besides dividends, is through share buybacks. And over the past 5 years, they've bought back 200 million shares. Home Depot trades at about $318 now, and it has a respectable yield of 2.07%. It is a little expensive as far as PEs go at 22, but for a company like this that's, number one in its market, number one in its niche, and so profitable and strong financials, you're going to have to pay up a little bit for a strong company like this. I think with a strong company like this, that if you buy it and hold it for 10 or 15 years or 20 years, you're going to have way more money than you would have if you invested in GameStop and AMC and all these other, trendy meme stocks that are popular right now. This is the kind of company that made Warren Buffett rich, and it can make me and you rich too. I know I'm buying this company. You don't have to, because this isn't financial advice, but that's what I'm doing. I'm working to get myself 10 shares of this. I've got one so far, and we're working on getting those other 9 now. You buy this, put it away for 10 years, your dividends are going to compound, reinvest, share price is going to keep increasing, shares are going to be bought back, and you're going to have a lot more money in that account than when you put it in. But I think that's all I got for this video. Hope you like it. I hope you learned something about Home Depot and see what a really great company looks like. Go and give me a like if you learned something. Subscribe to the channel if you haven't. Then I want you to go have a good day, all right? Justin out.